Well, hello, fools. Tom Gardner here with Matt Frankel, and we're so excited to spend the next 40 minutes or so with the co-founder and CEO of Klarna, Sebastian Shamiantovsky. Klarna, as we know, has, more than 100 million customers and millions on the wait list. I think 800,000 merchants, although we'll find out in a second if that number is low. Uh, Klarna operates as a bank, which is a very interesting dynamic to its buy now, pay later position in the marketplace. We'll talk a little bit about that as well. But what we're going to start with, Sebastian, is tell us how tomorrow's earnings report will go. Just kidding. Just kidding. I just
Oh
wanted to
my
get the
God, you
lawyers.
got me nervous there. I was like, what, really? What am I supposed to say now?
Can you just so many are now familiar with buy now pay later. Obviously, our investing members, a lot of them are Klarna shareholders, but nonetheless, there still are some uh, fools out there and people around the world that are still learning about Klarna. So let's go with the basic business, how it works, and just get that as the foundation for our conversation.
Sure. I mean, at the essence of it, some of you may remember that when we were kids, like at least when I was working in Burger King when I was 15 years old, and you would swipe your card, you would press one for debit and two for credit. And you had that optionality, which meant that all of your spending, you could decide whether you want to use debit or credit. Now, the banks, they didn't like that because the problem with that was too much was put on debit, too little on credit. That meant that you wouldn't revolve at the end of the month, you wouldn't build your balance enough. There wasn't enough bill to, so you would pay it all off. And so they removed that. But the truth is that there's a massive audience of customers. In the US, the McKinsey study showed that they call this the self-aware avoider. It's about 20% of the US market, which are people that simply are, they're tired of the dirty tricks of the banks, as Netflix Credit Cards Explains, I think, summarizes it up fairly well. And they just didn't like the credit card product because they felt they found themselves in debt faster than they realized. How did they get there? And they pay themselves off. But they're longing of that debit card with the optionality to use credit occasionally. And that is buy now, pay later. So it's a very simple offering. You go online, you make a purchase, you can pay it in full with Klarna as well, actually, just like a PayPal wallet. You can pay the full amount. But you can also pay it in 4 interest-free installments. Could be a $100 purchase. You split it up in $25 every second week. And so it gives you that zero cost fixed installment credit line to make some of these purchases just slightly more affordable on that single occasion, and then you pay it off. And I would argue it's a much more responsible credit product than credit cards and so forth, which is very visible in the fact that our average outstanding balance are much smaller than on credit cards, that our losses are much smaller than on credit cards and so forth. But it's an alternative to that product, and it's been growing tremendously both in US and Europe in the last decades as a consequence.
Yeah, hey Sebastian. So first of all, my first job was at Burger King when I was 15, so we have that in common. And I was there long enough ago that it was cash only. So I'm aging myself a little bit there. But I do want to get to the default rates and all that good stuff in a little while. But buy now, pay later is an increasingly competitive space, especially in the U.S. You have companies like PayPal, Afterpay, Affirm, Sezzle. I could go on. So what makes Klarna different from all the rest?
Well, look, it feels like you're asking me to sum up 20 years of my existence. Because the truth is that when we launched, we launched this in the small country of Sweden. And I mean, the first comment I had is like, already then it was like, PayPal is going to kill you. PayPal is going to get you out of the market. And then I was like, we managed to grow successfully here, become very, very prevalent. I mean, PayPal is actually almost non-existent in Sweden as an example. And then we started growing into Germany, and then everyone said, in Germany, you're never going to succeed. And, we did that pretty well. And then the UK and the US, I think like over those 20 years, we have shown that we just bring a lot to value. I think it's customer obsession. We're super obsessed about how we evolve the products and how we stay close to customer service and the feedback that we're getting, and just being very, very focused on that. Secondly, operational efficiency has been very important over the years. We've become better and better at that, at being, very efficient. Now AI has allowed us to accelerate that even further, which I'm sure we can come back a little bit later on. But and I think brand has been a big thing. If you look at Klarna, if you look at our website, if you look at how we communicate, we're just very, very different. All the other ones are blue, boring. They think that trust is still communicated through a lot of middle-aged men in suits and ties in marble offices. And unfortunately, after Occupy Wall Street and all that stuff, people don't necessarily relate that to trust. And banking is all about trust. So we try to speak a different language. We try to be approachable, simple, easy to deal with. I mean, to some degree, you could argue it's the same trend we've seen in carriers, where we used to have the old phone carriers, and then came these like new entrants like Mint and all these others that are like simple to use, straightforward, and so forth. And we have shown over and over again that we can be competitive. Now, today, the fact that we are international compared to the ones that you mentioned, I mean, maybe with the exceptions of PayPal, is also a huge asset, because if we work with big merchants, like whether it be an H&M or a Sephora or any of those international brands, they do prefer to working with a company that can also offer these services in 26 markets. We have a full banking license in Europe. We have most of the licenses in the US. So it's a pretty big business by now. So it's also one that merchants trust and like working with as a consequence.
There's always going to be controversy when a new entrant enters a field like retail banking. That's such a gigantic business worldwide, an opportunity. So I'm sure the credit card companies are doing a lot of PR work to try and tarnish Klarna in any way they can.
Really?
So I'm going to, having emerged,
I would agree with you on that one.
Having emerged as the fools on Wall Street in the 1990s, saying very similar things like "Don't trust the suits." We had a lot of media attack on us in the 1990s, but we learned, and that's fine. That's a fun part of the competition in its own way. But I wonder if you could compare and contrast. Maybe it's unfair what I'm about to do to you, Sebastian. You could just dodge it with excellent media training. What would you say is the best case argument on behalf of credit cards, and what's the best case argument on behalf of buy now, pay later? When is a credit card a very good tool and buy now, pay later isn't so good, and vice versa?
I mean, the truth is, unfortunately, that for very, very rich people, credit cards have been proven in the US to be the most efficient redistribution of wealth mechanics probably ever created. So I think the stats are something like they move about $30 from every low-income household and transform that into $700 into high-income households. Mm-hmm. And the way that works in the US is due to the very high credit card fees that the merchants pay. And since they're not allowed to discount credit cards versus debit cards and cash, they need to raise prices across the board. So everyone is paying slightly more at the merchant, but the people who are benefiting from that is primarily the people that have access to the biggest reward cards, the most expensive cards, the highest loyalty cards, and so forth. And it's true that mechanics, that it has function as such. So the honest answer to your question is basically, if you're super rich and you never revolve and you never use the credit facility at all, and you only collect the points, it probably is a superior product still in that regards. But for the rest, for all the rest of people, like, it is actually not that great. I mean, especially people who revolve end up, usually carrying a balance of like $5,000 in the US and paying 30% on that. Is not uncommon, right? So that is not a great product for that audience. And then
meanwhile on Klarna, it's like an $84. I'm not sure the exact dollar amount now, but so when the attack is, how can you be providing a lending facility for somebody to buy low priced items? Well, if somebody has some necessities in their life around groceries or any other aspect of their life, the fact of the matter is they're given a disciplined structure and format for it, and they're not carrying, as you say, thousands of dollars in debt at a 30% interest rate.
No, exactly. And I think that like people tend to forget about this. And to some degree, it's also like, I mean, I have to laugh a little bit when, people do like, they're now going with DoorDash and, pizza on installments, and some memes or tacos on installments or burritos on financing, stuff like that. But the truth is, what is the other dominant form of payment on DoorDash? Credit cards, right? So people, when you have a credit card, you're putting all of your spending of that month on credit, and then you decide whether you revolve or not. What we argue is that it's better that you use debit and then occasionally credit. And when we go to things like DoorDash or Uber, which are two great partners of ours in the US, the reason we do that is not because primarily they're interested in the credit aspect of our product. What they're interested in is they're saying, hey, you guys are huge in Europe, and you're operating at lower costs than both debit and credit, because we're coming from a market called Europe where interchange is regulated. So debit costs merchants 20 bips and credit costs merchants 40 bips. And Klarna has had to be competitive with those prices in order to grow as a network and grow acceptance and preference among consumers and merchants. Now we're coming into this US market and we're saying like, wow, officially debit is regulated, but most merchants tell us they pay 140 bips and they pay for credit cards 250 bips. And so, we are experimenting with these large merchants, like how can we offer you payment solutions that are simply cheaper, more affordable for the merchant and the consumer. And there's just this massive opportunity to disrupt in this industry because it's just been not competitive enough. There hasn't been enough competition, and there's this massive profit pool to go after. So to your point, right? And so these kind of announcements of DoorDash and so forth, what people don't realize, a lot of that is debit. We have a debit product that's almost 30% of our volume, where people pay the full amount, a little bit like your PayPal wallet, where you pay the full amount with it. And that's a growing and important product for us as well. So we just want to make sure that we kind of cater to all different types of situations. Because if you're only doing financing, if you're only doing like high ticket financing furniture, you do have a limitation in the size of your market. We've learned that from Europe. It's an interesting market. You can make a lot of money there. It's a great market, but it is limiting. We want to be an everyday thing. We want to be used every day. And you just don't buy a piece of sofa every day. You don't do it, right? You buy a lot of other stuff.
So you mentioned credit cards, and I feel like Klarna more than anyone else is trying to compete with the U.S. credit card culture. And I wanted to ask about one of your more recent announcements. And to be fair, I have an Amex Platinum in my wallet as I'm talking. So I'm one of the people who are getting suckered into paying these big fees every year as well. But you guys recently announced your own subscription products. I want to say they range from about $220 to $540, and they include a lot of what I'm getting for my Amex, which costs more than that, like airport lounge access, travel insurance, things of that nature. Is it fair to say that that's kind of an aggressive push to compete more with the high-end credit card culture of the United States?
Very much so. And it comes back to the core insight. This strategy of Klarna was really set in 2015. That's when we kind of pivoted in this direction. And the insight that we had is that we have learned how to onboard and acquire a customer directly at the most important time, which is when you're about to pay something. I mean, historically, if you look at these credit card companies, be it Capital One, who I know well, a lot of their success came from direct mailing. Amex used to stand in the airport and bug you when you were there and try to get you to sign up. These are not as successful sales channels. When it's really relevant, you're going down to Macy's and you're saying, can I buy this thing? And they say, yeah. Would you like to use Klarna? And you say, yes. Now you do. Like that's how easy it is to sign up and start using it. It's as easy as using your existing card. That's a fantastic customer acquisition channel. We have 800,000 merchants who promote Klarna all the time, show this as an option. So that gives us like this steady flow of incoming customers. You have to remember that Capital One and these banks, they pay $100, $150 to acquire a credit card customer. Amex may pay us up to $400. We're not paying anything. We have merchants who are advertising our payment solution to our consumers, and that's bringing a healthy growth. However, obviously, those customers may just use us for a single transaction. And what we've seen now in markets where we're very mature, take Sweden as an example, Germany, where basically the whole population is using Klarna. We obviously want to go from just being a single payment method to actually being, to your point, the full card, the full banking solution. And what's interesting is when we are accomplishing doing that, we're taking the average revenue per customer from somewhere between $25 to $30, which is this kind of standard for our 110 million that we have. But when we bring them a card and a bank account, that rises fivefold, right? So we're at $150 or $140 in average revenue. So, and when we looked at that, we were like, okay, how are we going to do that, to your point, in a difficult market like the US where there's so much competition? Where first of all, we solved the first thing, which is customer acquisition, which is usually the biggest and most expensive thing because you have to acquire all these customers and so forth, right? So solve that. 30 million consumers in the US, they're coming in, Macy's, Sephora, Walmart, they're all advertising the availability of Klarna. So that's already bringing us these customers in. Next step is basically then to upsell them and upgrade them from just a single transaction to the card. And there we're super happy now to see that this quarter is really taken off. So we're almost like 1.3 million active cardholders out of zero a quarter ago in the US. And those are, I would say, comes from two things. Sorry for a very lengthy answer, but it's an important question. That comes from two things. One is that first, relaunch a card that's debit and credit. Not just credit where you put everything, but it's a debit card where you occasionally can choose that credit. There's huge demand for that in the market, but everyone that I present that to, Matthew, does exactly what you said now, which is yeah, but what about my rewards? Like, okay, that product sounds nice. I like the debit flexibility with credit and not overextending myself on credit. But what about my rewards? And so what we're now doing is we're getting a debit card with credit card rewards. And that I think is super cool that we can launch that into the market, that we can actually offer rewards and benefits and cash back and loyalty points that are on par with what some of these credit card providers do. So that I'm very, very excited about. And I think that's going to just take off. Like I had, as a funny anecdote, I put on X that like, there was some guy that wrote me like, look, I'll actually abandon my Amex card if you, Sebastian, cut the card yourself, personally. And I said, I'm all in. Anyone that wants to do that, you're invited to come over. And we've had almost 1,000 people have signed up. So we have to do a pretty big event now. And I'm going to probably have a lot of ache in my hand as I'm going to cut 1,000 credit cards apart. And because people are just tired of these fees. They know that these credit card companies have been raising their fees recently. A lot of people are frustrated about that. Just up and up. They're not seeing the value for it. So there's options now. There's other options.
So we've naturally talked about the consumer side, which is, of course, most of the story for the average viewer or potential partner to the business. But I'd like to hear about the merchant side. Something like 97% of your revenue are merchant fees, if that number is right. Or please correct any of the numbers that I get wrong, which will happen multiple times through this conversation. But talk to us about why merchants are signing up with Klarna, and how many there are, and how the merchant revenue side works for the business.
So the idea was early on is that like, look, obviously offering people an interest-free installment, offering that to your customers is going to drive sales success. It's going to drive increase in average order value. It's going to drive higher conversion, more customers actually completing their purchase. So instead of what's happened in the US is you have both high cost to merchant plus high cost to consumer through revolving and so forth, right? We're just squeezing that and saying, look, merchants would pay basically the same that they pay currently for credit cards and other payment methods in the US. But the difference is they're making something much more affordable and attractive to the consumer because it's 0% interest, it's fixed installments and so forth. And that's paying off in average order values and in conversion. So they're seeing lift in sales as a consequence of that. And that is the primary reason for merchants adopting it. It costs them kind of the same as the other payment methods, but it actually drives real sales, right? And so that's been it. Now, what's been interesting for us, which maybe kind of separates us a little bit from competition, is that because we've been doing this for 20 years, at some point in time, we were like, okay, it's a heavy effort to sign every merchant in the world and get sales guys out there everywhere. So we started asking ourselves, like, we have to probably rethink this. We have to think differently if we're going to scale to the same size as Visa and MasterCard in number of merchants. And what we decided is that the holy grail for us was we work with partners today, Stripe, Adyen, WorldPay, all these big PSPs and acquirers. And we realized that like if we're going to hit really Visa, MasterCard numbers, we have to work through distributors primarily, even though we can occasionally sign a big merchant ourselves, but we have to primarily work with these distributors. I mean, it's very typical. You've seen that in a lot of other industries. Microsoft used to do sales themselves, Salesforce, and then eventually have this whole ecosystem of people doing sales on your behalf. And I think that like the same happened to us. So for the last 1 or 2 years, we've been investing in what we called global Klarna default. And the idea there was the holy grail for us was it shouldn't be that you go to Stripe, you get Visa, MasterCard, and then you add on Klarna or you add on. We shouldn't be an alternative. We should be default. We should be part of the standard package. You go to Stripe, you get Visa, MasterCard, and Klarna as standard package. And that we've now signed with a number of the largest PSPs in the world that process over $1 trillion of volume, each one of them. And that's starting to pay off in number of merchants. So I think what was really exciting in this quarterly earnings call is that, our merchant growth was about 13% a year ago, and now it paced up to 38%. So we're now at 851,000 merchants versus 600,000 merchants just a year ago. And this is due to this very, very focused strategy that we have to rethink how we work with these distributors and partners to really make them our primary sales vehicle versus merchants. And that is starting now to pay off. That's a long strategy, taking a lot of time to establish this relationship, to make it, valuable for them. And then they sell to the merchants, and then the merchants see the lift. I think it was super exciting. We saw with one of these PSPs, they just took Klarna live on a lot of their merchants. and those merchants automatically just started growing faster. The PSP saw higher fees and revenue as a consequence, because basically more payments volume is obviously good for them, and it was good for us. So it's like everyone wins, and that has been like how we can try to reach the network size. I mean, I don't think it's that different. If you think about Amex 20 years ago, you can only use it in a few places, and today you can basically use it everywhere. So it's a very similar strategy, and that's made Amex into the huge company it is today, and we're kind of pursuing the same strategy, but we have to do that with partners for that to be realistic.
It's inevitable, and we're seeing that in your growth rates. This is the wrong way to think about it, which is why I'm going to ask this follow-up question. Should you ultimately charge merchants a little bit more than the others because Klarna provides something special and gets premium pricing even from merchants? Or should you charge merchants a little bit less than everyone else does to show that you're the real winner in the category at scale?
I am very inspired by companies like Walmart, IKEA. These are very rare companies who applied a strategy to me, which is very long-term, which is that when you grow bigger and you make more profit, you share that with your customer. Not all of it, but part of it. And if you do that decade by decade, you start creating these positions and these companies that are just like almost untouchable, right? And I think that has never happened in banking. Like, I don't know, last time I heard a retail bank was like, we made an amazing profit this quarter. As a consequence of that, all the interest rates are coming down and all the customers are going to, enjoy better services at lower cost for whatever reason. And I think it is associated with the high switching costs that exist in banking. Like, it's just so hard to switch. The fees are intransparent. It's hard to understand what you're paying for. The banker was supposed to help you with your retirement plan, but instead was driven more by his commission and which retirement plan was making him more money or her. And so there's all these inefficiencies in the banking industry. And I have already, and we believed this already 10 years ago, technology, AI will eventually put all of that away. Like, all of that is going to go away. I mean, to some extreme, right? Like, but still, it's going to make these markets like both tech and fin, both retail banking and the classic technology companies will have to be like the rest of us companies who wake up every day and have to worry about, how do I get somebody into my retail? How do I get somebody into my restaurant? How do I make that customer happy? How am I operationally efficient so I don't run out of money compared to my competitors? I mean, those companies have been virtual monopolies and they've been making so much money. I mean, the profit pool of retail banking is like over $500 billion. The one in tech, in ads, is over $500 billion. That's $1 trillion. That's not because those companies are customer obsessed, or because we feel that they wake up every day and care that much about us. It's switching costs. It's all these inefficiencies. And so, to answer your question, then, what I feel is that, like, we have to lead, right? We have to lead and dare to be a bank and a tech company that is actually willing to give some of that money back to our customers, to continue being customer obsessed, to continue being efficient, drive operational efficiencies, because that's going to happen anyway due to AI. I'm 100% convinced about it. Then how much? People could argue, like, how much is it going to be, this and that, whatever. But directionally,
as long as you're leading, then
Exactly.
then you'll gradually figure out how much.
Exactly. And there's tons of examples of that. There's some low-cost airlines in Europe, for example, that took on that disruptive force and been, the highest profitable making airline in the world for many years. So there's tons of examples of where, if you're willing to come in with both value and low cost, you create very, very interesting moats over time. But you have to be more long-term. You have to be willing to make the commitment and go there. And that's what we're doing.
I want to talk a little bit about the future of where you see things going. So one of the statistics that really stood out to me is I think it was 83% of your most mature market, which I'm assuming is Sweden, is our Klarna users. In the US, Buy Now, Pay Later has a total of roughly 1% to 2% of retail sales. How replicable do you think that is in other countries? Obviously, you're not going to get an 83% market share in the United States. Where do you see Buy Now, Pay Later and Klarna specifically getting to in 5, 10 years and beyond?
Well, I do think that, like, we are a bank. We're fully licensed. We now offer bank accounts, cards. And again, it comes back to the thing I just mentioned about AI. I think that this strategy that Klarna is on right now was set 10 years ago. At that point of time, we sat down, we said, okay, what's the future of financial services? And we said, well, look, the future of financial services is basically you wake up in the morning and you have your digital financial assistant that says, you know what, I analyzed your mortgage last night. I realized I could save you $20. And, the only thing you need to do to get the lower rate is just say yes, because I'll do all the paperwork for you. I'll do all the switching cost for you. And so to us, that was like, wow, that's going to happen. That is as real as self-driving cars. I don't know when, but I know they will happen eventually, and that was true for us 10 years ago. And now, I was with the kids in San Francisco last year and we went to do Waymo and we're like, wow, it's actually happening, So this is our guiding star. And I think, what does that mean for Klarna? It doesn't mean that there will still be a lot of fantastic retail banks that will make fantastic profits. They will make less than they do today. But again, we're in $1 trillion addressable market. So for Klarna being a $3 billion revenue company today, there's tons of opportunity to grow and be one of the ones that pushes that envelope, that drives that transformation. But the conclusion was that in the longer term, that means that you may look at having fewer large retail banks, and they probably need to be global. They need to be very AI savvy and technology savvy. They need to wake up every morning and care about getting the customers through the door, because those customers will be able to move much faster than they do today. And they need to be operational efficient and can't allow themselves the excesses, the grown-up kindergartens and all the other stuff that we've seen in both tech and banking. That just won't be around. You won't be able to do that. And so I think that the opportunity is to be one of those global retail banks. And that means that I hope that we are many more users than 111 million that we already are, but also, obviously, even more importantly, that those users use the full product suite of Klarna, not just a single buy now, pay later transaction, whatever, but actually use the card, use the banking facilities, and other additional financial services that we're bringing to that audience.
2 years ago, maybe a little bit less, we made the decision internally, we're going to be the world leader for retail investors using AI. And we're going to push everything we can on the table in that direction. That was difficult because with a 31-year history, we did have a habit of bringing forward legacy assets and sort of squeezing as much of them as we could. We never went public. We bought back all of our venture capital investors. So we've learned to manage our dollars very carefully. And that can sometimes mean you hold on to old technologies too long. We've woken up to the reality. We're a remote first company. So our Fools are spread around the country and around the world, which allowed us to recruit AI talent in any country and put them on an equal standing with full-time employees. We're all the same size square in a Zoom call. So what that has led us to is scoring public market companies in a variety of ways and bringing new creative expressions that nobody could have thought possible, particularly at scale for a company of our size. Therefore, we've been watching Klarna closely, and I've been following the decisions that you've made, the feedback that you get along the way and where you are. And I'd love to hear where you are in your path now with AI, maybe a little bit just in comparison to credit card companies, other buy now, pay later companies, and what you see generally in financial services, and then against your own hopes and dreams for where you see yourself getting with AI.
Yeah, and I think it's really cool that you have done all of that. And I think that's the only way to deal with a shift like this, is that like you have to, when something like that happens, right, and we're seeing this massive transformation, you can decide to say that's scary, or I tried it once and it didn't work, and whatever, or you can lean in and you can learn and you can test and iterate. And it's really impressive that you guys have been doing that. I've been following that as well, because you look to a lot of companies like who's actually doing that, who's just like on a daily basis trying to learn. So I think that's pretty cool. I think, look, from my perspective, I look at the numbers here. In the last 3 years, our growth is 108% in revenue, and our adjusted OPEX growth is 2%, right? And that is not only AI, but that is partially due to AI. And what we've seen is we basically have reduced the number of employees by almost, I think the number is, let me check, 47%. So it's almost half. Now, again, and maybe, you could argue it's because we're in Europe, or you could argue that it's, it doesn't matter. But we decided to not do that through layoffs. We have basically relied on...
We're the same.
Yeah. So we're
doing the same.
That's great. We relied on natural churn. And so we just said, look, in general, at Klarna, people stay 5 years. And so that means that about 20% leave every year naturally. And so if we just rely on that, we're just going to shrink, right? That's what we've been doing, basically. So no layoffs. And then in addition to that, we also promised our employees, we can see the salary cost, the total staff cost has gone from about $700 million to 591. And so it has shrunk some, but not at the same pace as number of employees. And the reason is that our compensation per employee has gone from $126,000 to $200. So we have actually said to our employees, look, you are going to benefit as part of this AI transformation. You are going to get a share of the benefits that the company gets to be able to operate with fewer people, but bigger revenue and bigger gross profit. And some of that we're going to share with you. And I think that at least at Klarna has created, I mean, people are obviously nervous about this. What does it mean for professional jobs in the future, white collar jobs? What does it mean for the kids and the education they should get and so forth? But I think at least this has created a healthy setup for Klarna where our employees are participating in the transformation and getting benefit of that as we're funneling some of those savings, so to speak, back to their compensation, right? So I feel that has been good. I think, however, if I look at like what we've been doing with AI, the key thing is that we have predominantly used it for operational efficiency, right? So we haven't yet launched a product to our consumer. The AI chat assistant, fine. That's, I would say an improvement because, a lot of customers actually tell us they prefer that experience to what we were able to do previously with humans. It's the equivalent of about 850 human agents. It's not as smart as the humans. It does different type of mistakes, but it's much faster. A human would often have 5 chats going on at the same point of time. So and that's just like how it works. And I would do the same if I'm in customer service because it would be boring. Sometimes the customer is very slow. So you just go and chats with somebody else and then you come back. But that meant that the average time for a chat would be 12 minutes when it was human to human. And it's 2 minutes when it's human to AI because the AI is just answering you and kind of focused on you in a sense, right? So you have those benefits, but what I still feel is like what we haven't done yet is we haven't launched an AI-powered service to our customers, right? Where they can generally get that. And that's a huge priority for us. And we're working with a lot of people. We're very excited to be able to bring something in that. But we have to solve some typical problems of AI. So one is like precision. I mean, it's fine if you're going to ChatGPT to get kind of an okay answer. But, if you're asking for how much money do I have in my Klarna account, it can't be like approximately $120. Like, you have to know exactly how it is. And also it has to be accurate, right? You can't be like, oh, it was $50. I'm sorry, it wasn't $50. It was $120, right? So there's some challenges with LLMs and challenges with AI. And obviously a big focus on us is to solve that. But another one also, I would argue, those are maybe more well known, but another one is to us is aesthetics. We're all about beauty. We love our brand. We love how we express ourselves and what we do. And chat and sending text back and forth is just too ugly for our taste. There has to be images. There has to be diagrams. There has to be graphs. There has to be other ways to express and communicate with the customer that feels more intuitive, more human. Different, right? So there are things like that. And there's also some familiarity. The problem today with AI is that it's unpredictable. You answer this and you get one answer and you ask it the same 5 minutes later and you get something else. And that's also not great for trust. And we are in the trust business. So these kind of, the flaws of AI is what we're really focusing on Klarna right now to basically solve for. So we can bring a product in financial services that is trustworthy, but powered by AI and can take all the benefits of this technology to create the next generation of experience.
One of the stories of AI is, of course, what you're saying in the beginning of your answer about operational efficiency and what it means for employment. And there's so many societal questions. We could talk for an hour about that, and it would be a fascinating hour. And perhaps that will happen sometime in the future if you have that time for us. But we're obviously thinking so much about it because we have our own company, and then we're studying other companies and thinking about what's going to happen to the world industry by industry. But what you're talking in the latter part of your answer is about the creative process. And I'm just curious about how you're sourcing AI talent, because one of the things that we're experiencing and in talking to some other companies, it somewhat confirms the extreme of Meta saying we're going to pay $100 million for that AI engineer to come over to our team, that it does look like employment is becoming a little bit more like a sports team where, to take the classic Messi or LeBron, or somebody's going to make, a multiple of the person sitting on the same bench and going to the same practice that they do. So I'm wondering if you're experiencing that or seeing that in your search for talent that's going to drive those new creative solutions.
It does. I mean, I maybe sometimes also benefit to not be in Silicon Valley, like where the craze is the craziest, so to speak. So I do think that that's probably a benefit to us. But obviously, we have software engineers in Berlin, in Stockholm, in Milan, and a little bit in the US as well, but predominantly in Europe. So, but obviously, and here there's competition for talent as well, for sure. I think that the interesting thing is, if you would ask me a year ago, what we did at Klarna is we stopped hiring almost entirely everything but engineers. So engineers we actually did continue hire, but more recently, since I'm myself experimenting a lot with Cursor, with coding, with AI, and so forth, I've come to the conclusion that it's starting to get so freaking good that actually a lot of our engineers get stuck because they complete the requests. And if they don't have the business savviness, if they don't understand what the customer wants, if they don't understand the consumer or the business that you're serving, they can't continue. They can't build more because they've completed the task. And so I would argue, almost felt the swing was more towards technical skills and having people that could, do that. And now I'm almost feeling it's swinging back to people with business savviness that understand the business. I'm not as concerned about whether I have a super scientific guy that can train an LLM. I've actually tested in running my own LLM at my own machine at home just to understand how it works and some of these open source. I put a lot of time to learn and understand these things, but I'm less worried about that. What I'm worried now about is people that can take business decisions, that can understand the customer, that can feed the instructions to the AI system and say, this is what we should be doing. This is good for our customer. Because there, the AI is still a little bit it can make you a fine presentation or whatever, but also you look at it it's not that, I want this crisp, I want this perfect for my customer. This customer is actually going to be interested. The business acumen, that and the savviness and the street smartness, that is what I'm mostly lacking from my AI. And I really think that that's also because what people tend to forget is an LLM is all about averages. Right? It's always trending towards averages, but everyone will know stock picking. It's a good example. If you stock pick on average, you're going to have average returns, right? If you do an average marketing campaign, you're going to have an average marketing return. So, but if you want to be successful in business, you have to do the things that are out there, that are a little bit, edgy, different. Like you guys, the whole concept of fools and all that stuff. These are the things that really resonate and create some differentiation. And that's actually, LLMs aren't that good at that, to be honest. AI isn't that good at that. Maybe it will change, but currently it's not the case.
Yes, I wanted to ask, I think it's an AI adjacent question. So we mentioned some of the differences between Klarna and the others. Another big one that I've noticed is you're one of the only financial service companies of any kind that gets a significant portion of their revenue from advertising. That's a big... first of all, I have to imagine that's part of your AI strategy is to improve advertising to make it as, efficient and attractive to potential advertisers as possible and merchants. But can you kind of walk us through where that fits into the overall business model? Because it is a pretty big part of your revenue.
For sure. So it also comes back to also that maybe I think that the most or least well known and least well understood huge advantage of Klarna is that as a network, you can argue we're American Express, we're third-party networks. You have Visa, MasterCard, four-party networks where you have, banks as issuers and banks as acquirers. So banks on the merchant side, bank on the consumer side. You have American Express, who has the direct consumer relationship, but then directions, multiple merchants through partners. Klarna is a network, but there's a huge difference with our network. On every transaction that people purchase something with Klarna, we know not only the amount that you purchase for. So you went at Sephora. It's not just that you bought at Sephora or Macy's for $100. We know what product you bought. We know what what sizes, what colors, that whole thing. And it's a very important part of our offering because what people discover is they open the consumer app, they see their their purchase history, their transaction history, and different than the credit cards where they barely understand what it said. It says $100 and there's some strange merchant name. They see the logo of the merchant. They see the products. They know exactly what they purchase. It makes disputes easier, returns, warranties, a lot of value from that data. But we also recognize that wow, that data will obviously be very valuable if you want to promote something. Amex has for many, many years done membership rewards and different hey, get extra points at Uber, this and that. So they've had some of that kind of to a point, advertising income and so forth, but it's been very tiny, and it hasn't really been a big piece. And the problem is, as a bank, you can basically make money from three things, right? You can make it from merchant fees, from consumer fees, or from advertising, right? And we just said, look, let's find a good balance. Because if I look at some of the subprime banks, I'm not going to mention them by name in the US, but there are a few very big banks. I tend to look at them and I'm like, making too much money on credit, too much interest, too much about exploiting the consumer's lack of discipline and so forth, and all revolving. So, I don't want to be there. I can do some lending, I can do some interest, but I don't want to be on the most extreme. And then I look at others, some of them already mentioned, like the Amexes of the world. And I'm like, okay, almost nothing on the consumer side, but tremendously expensive on the merchant side. And then you're fighting this war where like, I don't want to accept Amex. I don't want to accept this because it's too expensive. So you're not making anyone happy. So the point is like, I was like, how do we find a better balance between those? So we said there's a third revenue line that is underappreciated and hasn't been pursued to the same extent. And that is advertising. If we can really even get merchants to say, hey, I want to pay Klarna some money because I get some new customers, I get additional sales beyond just offering our payment methods. And the interesting thing is that business has actually grown ahead in number of merchants, is ahead of our payments business in the US. If you take our top 100 US retailers, more of them are using our affiliate and our marketing services than our payment services. And so that's been very interesting, but it's still been tiny, but we've been growing it and we're trying to figure out the right balance of how to do that. And I'm super excited about it because I think if you can continue growing that and making it a significant piece, what does it mean? It means you can be even more affordable in your interest rates versus consumers. It means you can be even more affordable in your payments cost versus merchants because you have this third leg that nobody else has. So for the long-term competitiveness of the company, I think it's a fantastic thing, but we're still like learning, iterating, trying to find exactly how we do that in a balance where consumers like it, merchants like it, because it is a network of itself, and we need to make sure, just like eBay need to make sure that both buyers and sellers are happy, we need to make sure that both consumers and merchants are happy. So we need to find the right balance there, but we're very dedicated to that.
We want to close with a little bit about your journey and maybe a little bit more about the culture of the business. But I asked this question of the founder and CEO of a company called Rocket Lab, which you may be familiar with. They're a competitor to SpaceX. And their founder, Sir Peter Beck, is a brilliant person and another person who, like you, has fully immersed themselves in their business, living inside their company for decades, which is generally what we love to find at the Motley Fool. And I asked him this question. We got an interesting answer, so I'm going to bring it out for you as well. What effect does doubt have on you throughout your life? You've created a business that at its inception, very few thought it would succeed, let's say. You had an interesting angel investing round to get the business started. So you operated in a world of skepticism, and that's just continued. And it probably won't end until you get to a stage where you have much larger market share in the U.S. I don't know what the tipping point will be that people say, Klarna's for real. It's not going to get destroyed in a recession.
I don't know what the tipping point is either.
It may never. And in part, actually, our company name positions ourselves to never have that moment. We never get to have that moment because there's always somebody who tells me, I sat on the sidelines for a year looking at what you're doing, trying to figure out if you're real. Is this serious or are you making fun of me? So particularly as we translate into different cultures around the world. So to what extent, what effect does doubt have on you as a motivator or maybe a story or two of how that has affected you?
No, I think look, first and foremost, my beloved mother, she's very Polish. And so that means that when you call her, she never tells you like, oh, I'm so happy you called me. She's always like, why haven't you called me in a week? And I think that like I'm grown up with this never being enough, never being able to satisfy it, right? And always wanting to try to find a way. And that my upbringing was slightly problematic, was a dysfunctional relationship between my parents. They divorced early. My dad ended up drinking himself to death. I myself am a sober alcoholic since over a decade, and I've thought about this question that you raised now a lot, and I realized that actually I tend to constantly doubt myself, constantly question myself, and I think that the only excuse or the only way I could avoid it was when we were still 3 co-founders in the business, because at that point of time I still had the optionality to say this thing went wrong. because of my co-founder, because he wanted it this way and so forth. And when eventually the two of them left and it was only me, which is actually 2015, even that optionality disappeared. And as I always say, like, I mean, obviously at Klarna, I can't take credit for all the success because not all the success is mine. I've contributed to some of it, but there's going to be others. But unfortunately, as a CEO, I have to take the blame for all things that go wrong because in the end, I'm responsible for all of it, right? And so, but I think that that's a downside, that's a challenge. But the upside of that is specifically since 15, when my co-founders left, I just stopped blaming others. And the only thing I focus at is what could I have done differently? And I think the benefit you get that, and I see that in relationship to my kids, and I see that in relationship to friends, but also to colleagues, is when you stop thinking about what the other people could have done differently and who else's fault it was and so forth. And when the only thing you care about is what you yourself could have done differently, and you doubt yourself constantly, and you always, like, the benefit of that obviously is it accelerates your development. As a leader, you develop faster because you lose less time on just thinking about what others did wrong or whatever, and you just doubt yourself and you constantly ask yourself how you could have done that differently. So I think, to me, at least, the benefit is I think it's made me better. It's accelerated my ability to run this company and scale it and so forth. And I think I do this job better than I did 10 years ago, but I am very, very far from satisfied. And I still wake up every morning and I'm like, oh my God, am I doing the right thing? Is this really going to work? And so forth. Like, and I just, the day I stop doing that, it's time to recruit a new CEO. I think let's rid of me at that point of time.
But a very quick other angle to it, just very briefly. How about when others doubt you, or when people doubt Klarna?
Yeah, I've been exposed to that now for a very long period of time. As I said, it's a little bit like, people first said it's only going to work in Sweden, then it was only going to work in Germany, then it was only going to work in UK, then it was never going to work in the US, then it was going to be this, then it was going to be that, and I was just like, okay, guys, you know what? Like, I get it. People, I mean, it's a tricky thing. Look, we're growing a bank in 26 markets with credit exposure in macroeconomical swings. I've issued over $600 billion worth of credit over the 20 years. I have been able to do it in under 70 bips, losses. But like, that is a difficult undertaking, and scaling a bank with compliance and risks and IT security and all these things, and scaling that really fast and all these markets, like, it's a freaking challenge. So I'm okay. I get it why people can doubt that sometimes and say, no, that's not going to work, or that's too risky or whatever. Like, I get it, but it doesn't make me feel less motivated. On the contrary, right? Very early on, when 3 months into starting the company, we were invited to this Dragon's Den exercise in the top school in Sweden. And the biggest in the jury at that point of time, or in the kind of investment board, was like the founder of H&M, the CEO of McKinsey in Sweden, and the big family Wallenberg that owns basically half of industries in Sweden. And they all told me, like, there was a competition, 3 people pitching, and we lost. Right? Even the king was sitting at the front, even the king. And so we lost. And then I came out of there and I just, I hold my fist and I was like, I'm going to show them all. And but it was funny. One professor actually very nicely came up to me and said, look, guys, forget about what all those guys said. The banks are never going to understand what happened. Just go for it. And I think that was such a nice thing to do. It's such a nice message to send. And I'm here, like, I've been doing this for 2 decades. I hope continue for a few more decades. If you're going to disrupt retail banking and this $500 billion profit pool, you're not going to do that in a night. It's going to take some time because it's trust, right? You need to build trust.
Well, I want to close with saying that I was one of the original buy now pay later doubters. When my first exposure to it was Affirm, which went public around 5 years before you did. And I remember saying that as soon as the economy turns, all these loans are going to default. It's people who are, they're getting a pay in 4 installment loan on a small purchase, then compounding it into something else. And I just didn't have very good, a future outlook for when the economy went bad. This, Affirm went public during the pandemic when there was free money everywhere and low interest rates everywhere. And it was just a different time. And I will admit that I got it wrong. And your default rate, in which we haven't really even touched on, is, it would make companies like Capital One and Amex jealous. And so my big question to you is now that we've established that buy now pay later is for real, and that Affirm has more going than just buy now pay later. They're becoming an all-in-one payment solution. What excites you the most about the next, say, 5 to 10 years of what you're doing?
Well, I think that's also good. One thing to mention there is that buy now pay later caught, I think maybe basically to some degree, it was Afterpay in Australia that really like kicked off the trend, and kind of the as kind of more people were talking about it in the public domain. But the truth is that not all buy now pay later are equal, and a lot of financing companies out there, or even smaller publicly traded companies, are saying buy now pay later, but what they really mean is it's just another way of subprime credit or high interest. So unfortunately, like a lot of people now latch that onto themselves because it's been the like hype word, but doesn't mean that the product they're offering. To me, buy now pay later is zero interest, fixed installments, and really trying to keep down the cost of borrowing for the consumer. So that type of credit really works. Like one of the things I remember, to your point, when 07 happened in the US, I followed it closely because we were only 3 years into Klarna at that point of time. And one of the things that I dug up as a statistic was, don't borrow people cash, right? Don't borrow people cash. If you only borrow against product and consumption, you actually see lower losses. And I remember Nigel Morris, the co-founder of Capital One, who was on my board for a few years, he told me, second best thing that Capital One came up with, move your balance to Capital One, right? First best choice they ever did, stop allowing people to do that 6 months before the financial crisis. So like from a bank perspective. So, and I think that was probably fair for them, right? So the thing is that you have to be thoughtful of what kind of credit are you offering and so forth. But I think that like over the years, this model, take as an example, we underwrite in real time every decision. Credit cards give you a balance, then you run it off and that's it. In our case, because we underwrite every decision, when macroeconomics change, like when COVID came along and we were like, this may actually be a downturn economically speaking, we can just adjust our underwriting in real time. And it takes us only 60 days for 50% of our balance sheet to be underwritten by the new standard as opposed to the old standard. If you take a traditional bank, because those credit card balances are $5,000, even if they change the underwriting standards, it takes them 2 or 3 years to heal their balance sheet or adjust it to the new macroeconomical standards. So what I've seen is our model is just more flexible and agile. I've been able to, to tackle these macroeconomical swings much more efficiently than a lot of things. But it requires, like, to your point, right? Like, if you quickly came to that conclusion, it makes sense. I would have come to the same conclusion. You need to really get into the details of it, the weeds of it, to really see that this actually model is superior from issuing credit than the others, right? It takes some time to see through all the noise of media, also often misreporting on this or misunderstandings and stuff, and then getting through to that. No, I think so. But to answer your long-term question, look, to me, it's all, I want to be that digital financial assistant, right? And I'm not going to compete with you guys on great investment stock advice because you're going to do that better. But when it comes to like my day-to-day spending, when it comes to my, can I buy these contact lenses cheaper elsewhere? Can I, get a cheaper credit? Can I, all these things that are more like in the day-to-day spending of people, less maybe stock picking, then I want to be that digital financial assistant. I think that's the future. And I think if you do that job really well, it will be, the total profit pool will become smaller, but there is still hundreds of billions of dollars to go after here. And I think if you stay very focused on customer obsession, you're very obsessed with like trying to drive as much value for and make it, for as little cost as possible, to be honest, like as much value as at little cost as possible, and then you just stay operationally efficient and utilize all the technology, then you're going to build something very powerful. And you're actually going to some degree, disrupt retail banking. And you're going to participate in bringing more values back. The excess profits that this industry has earned over so many decades due to the lack of transparency, lack of customer awareness of these things, and lack of mobility of customers is just insane. And if I can put more of that money back in people's pockets, and at the same point of time, by doing that, building a bigger business that is, more scale and more successful, then I can at some point of time retire.
And your mother will stand up and applaud.
Nah, she will still not do that. She was still like, why didn't you show up for supper yesterday? Hopefully. Somewhere maybe behind she'll say something.
Well, for us as investors, to close, just a brief statement that when you find a leader like Sebastian in a company with a great brand, with a worldwide opportunity, with a long-term vision, and it's misunderstood by the general media, and there's a lot of confusion, that creates the pricing opportunity for us to make some great long-term investments. That's why we recommended Klarna, and I expect at the Motley Fool and in our Hidden Gem service that we'll be recommending Klarna many more times to come. And of course, we make investments behind our recommendations and typically hold for 5 years to 10 to 15 to 20 years in the cases of Netflix and Amazon, and some losers that we have along the way as well. But we're so happy to have found Klarna and been studying the company, and so grateful that we've been able to spend this hour with you, Sebastian. And Matt, thank you for your hour in preparation as well. We wish you the very best at Klarna. We'll be following along and getting back in touch in the year and years ahead. So thank you, Sebastian.
Thank you so much for having me.